Hello, everybody. So, since my finance video, my last video on finance, had received so much of response, I thought I'll make one more video on one more important and one of the prime aspect of finance, which is savings. So, in this video, I want to share some of the simple saving tips which I have myself been implementing, and something which has been recommended by the likes of Warren Buffett also. So, let me quickly take you through some of the quick and simple saving tips which I have myself followed. So, first and foremost, there is a rule called the 50-30-20 rule. So, as per the 50-30-20 rule, 50% of your savings, of your salary, should go towards your necessities, 30% goes towards your want, and 20% goes towards your savings. Now, this is the minimum. You can definitely scale up depending upon your personal requirements, but your savings definitely should never go below 20%. Next, let's say you start off at a position where you have spiraling or very high debt. Okay, in that case, what do you do? So, do you still maintain this 50-30-20 rule, or is there any change to that? So, my answer to that is that if you have borrowed your debt at a higher rate, so let's say you have borrowed heavily on your credit card, so in that case, pay off your credit card, pay off those expenses, pay off that debt first, and then whatever remains, then you follow this rule. Why am I asking you not to save here and why to pay first? The reason is because your debt carries an interest of, especially your credit card, would carry an interest of close to around 24%, whereas your savings will give you close to something around 8%. So it wouldn't really make much difference, right? So first pay off that debt which you have, and then start applying this 50-30-20 rule. Okay, now coming to one very important tip is usage of credit cards. So it's a very convenient, plastic card which we carry along with us, and very easy to, get attracted by that newest deal and just swipe that card and enjoy the benefits of it. But in the long run, let me tell you, credit card, using credit card avidly for purchases which you don't require, could leave you into a spiraling debt position. So be very careful, very cautious when you're using your credit card. I, for instance, had a very harrowing time using the credit card and then following up with the statements which used to come. So I have literally stopped using my credit card altogether. I would prefer using my GPay or my Paytm or a direct bank transfer. Even those are so easy to use, and most importantly, when you use UPI, when you use your net banking, you're using your money. A credit card makes you use somebody else's money. Don't forget, at the end of the month, you will have to pay it. And again, another flip side to using credit cards is that credit cards often come with surcharges. So why should you go ahead and pay surcharges when you can easily use a GPay or a phone pay and not have to pay anything extra? However, having said that, there are also certain advantages of credit cards, right? So, for example, you accumulate your reward points. For example, for you have to pay the credit card bill only in another 1 month's time. So it's effectively giving you a 1 month interest-free loan. So the bottom line of using the credit card is that only if you are sure that you are able to pay that money at the end of 1 month and you really, really need to make that purchase, and you do not have any other easier or cheaper finance available with you, then credit card is something which you should use. Otherwise, my suggestion will be, and something which I personally also follow, is steer clear of it. Okay, now coming to the second most important, as I mentioned about savings. Now, it becomes very difficult, especially for compulsive buyers, when you see that sale going on, when you see those ads flashing. You know, go towards, you are drawn towards using that, maybe your net banking or your GP, and make that purchase. It's so flashy, it's so attractive. So one method which you can use is setting up a compulsive saving habit. Now, how do you do that? So one very effective measure is setting up an SIP. So when you set up an SIP, what you do is maybe maintain two accounts. So you know that a certain amount has to go towards your SIP on a specified date. So let's say that you have a SIP of 20,000. As soon as your salary gets credited, move that 20,000 from your account, from your main account where your salary is getting credited, from which you pay your expenses, to another account. So what happens at the beginning of the month itself, you have moved your savings towards another account, and what you're left with is something with which you will have to live through the entire month. So if you do something like this, you ensure that even if you are getting attracted towards that flashy sale, you don't have the funds to pay it, right? So you are saved from making that compulsive choice, and at the same time, a good amount is getting accumulated every month in a investment. Now, coming to that, what are the investment avenues open? Now, the common things which people usually say is you invest in FDs, you invest in real estate, you invest in mutual funds, and so on and so forth. So I will not spend too much time in this video telling you about the pros and cons of it. So you can choose your investment vehicles as per your choice, but definitely a very safe choice for people, those who are not accustomed much to to doing financial analysis, or not very accustomed to the stock market. A very safe bet would be investing in your mutual funds. I'll cover that in another video going forward. Now, the next very something which is overexploited to some extent, I would say, is investing in real estate. Now, this might come as a big blow to many of you. Real estate, investment in real estate is not at all a very wise investment. Why is that? This is because if you're living in that house, if you have bought a house for you to stay, then it makes sense. But if you have a house, let's say in your hometown, and let's say you're staying in another city for your work, so you not only have to bear the EMI of that house, there are municipal taxes, there are repairs and maintenance, and sometimes the rental, even if you rent out that house, the rental which you get from that house is not good enough to cover sometimes even your EMI. And most importantly, real estate is one of the most illiquid assets. Tomorrow you need the money. You never know whether you will get the money or not, whether your house will sell or not. Even you're not sure about that. So until and unless you want to buy a house where you want to stay in, real estate is not a very good option for investment purposes. And very importantly, especially if you are the sole breadwinner of your family, get yourself a life insurance and a medical insurance. Next tip, save for your retirement. Please do not consider your children as your retirement corpus. Save for your retirement. And the earlier you start saving, thanks to compounding, the more corpus you will accumulate over a period of time. And most importantly, another rule, which is the 30-day principle. So the 30-day principle is, if you want to invest or if you want to make a big purchase, hold on to that urge for some time. It's usually said 30 days. Even after 30 days, if you think that that purchase is really worthwhile, go ahead and make it. Most studies have shown that most of the purchases which we think are very important for us, after a 30-day period, we realize that we can do without it. So hold on to that urge for 30 odd days. You'll save a lot of money there. And last but most important, COVID has shown us that whether you're in business or whether you are in a profession or whether you're in a job, it's very important to have at least another source of income. So start your side income. And for that, you need to invest in yourself, invest in your skills. So, by far and large, the most important investment and the investment with the highest return is investment in skills of yourself. So, happy saving, happy investment, and leave your comments below and let me know if there is any specific area of finance in which you would like me to make a video on. Thank you all so much.